In this video, I'm going to walk you through a proven A+ setup with a checklist so you can follow it step by step. With this A+ setup, you can get profitable, get funded, get payouts, and I use this exact A+ setup to gain over $1 million in funding and over $100,000 in profits. No time to waste, let me show you how it works. So the first step in the checklist is a liquidity sweep in a key level. A liquidity sweep in this example is a swing low that's being ran into a key level. A key level is a old low, old high for value gaps or blocks. Most of the time in this bullish example, I use an old low or a bullish for value gap as my key level and use time frame alignment with this. So if this is a weekly for value gap or an old weekly low, then use a 4-hour structure to get this entry in. Most of you watching this are intraday traders. So let's say this is a 1 hour for value gap. Then I use a 5-minute structure. This is a 50-minute for value gap. Then I use a 1-minute structure. So when you see the liquidity sweep into a key level, then you want to see second is a market structure shift. Market structure shift is when the last swing high that took the low is taken out. And it is right here. So here you have a market structure shift. Then for the entry, you wait for a retracement into a for value gap, order block, or breaker. And the more that are present in that area, the higher the probability it is. I don't have like a set PD array I'm trading. Most of my entries are around for value gaps and order blocks. Sometimes there's a breaker as well. But use for yourself the PD array that works the best for you. So let's say in this area, there is a for value gap that's being created because this displacement of the market structure shift. There's an order block in the area. There's a breaker in the area. So once price comes back into here, I'll also use premium discount or optimal trade entry to go from swing high to swing low to want the displacement range. When the price comes back to discount of the range in a long example. If you're in a bearish example, then you want to short into premium of the range. But here in this example, we're doing a discount of the range. And what I just did was Option I or Control I on your keyboard if you want that shortcut. And OT is from swing low to swing high. So once price comes back into the OT area, that could be a very nice point to take an entry. And finally, the structure needs to form in a kill zone. So use time in your trading. Use time and price. So let's say this is in London kill zone or New York kill zone. Let's say it's at 9:30 a.m. EST. Awesome, that's what we want. I'm not going to waste your time in this video to breaking exactly how value gaps work or how breakers work or how premium discount works. I have dedicated videos to all of these concepts here on this channel. I'll leave the link to them in the description. I have a full 90-minute mini course where I break down every single ICT concept very fast, very precise. So check that out after this video. And now you know the framework, let's dive into some examples to see this in real time. I spent hundreds of hours studying ICT concepts and I broke down every single concept with my own personal notes in this 500-page PDF. It goes over everything from entry models to the different concepts, from interest rates to everything you need. So if you want to save those hundreds of hours, want to get it right now, I will leave the link to this PDF in the description. Here we're looking at ES on the 1-minute chart and look at the time, it's 10 a.m. So inside the New York kill zone, we just traded to an overlapping 15-minute and a 1-hour bullish for value gap. And we just had a liquidity sweep right there. We took out a swing low into a key level. That's the first step. Time frame alignment, 15 minutes and 1-minute structure. And now let's see for the second step is a market structure shift. What's the last swing high that took the low? That is right here. So once we broke structure here, there is where the entry comes in. For value gap here, you have an order block sitting right here. So inside this area, you could already take in a trade stop below the low for static 1 to 2. You can also target these highs, but let's say you also only want 1 to 2s. Let's see if we find an entry. So price comes here into the value gap and then moves higher towards the area. Cool. And let's say you miss this first entry. I like to take my entries in for value gaps. So let's say here's the other value gap. Take your entry right there. TP above the highs for 1 to 2. And also the second entry would have given you TP. Why? Because the drawn liquidity was this high. For the next example, we're looking at NASDAQ at the 5-minute chart. And we just took out session liquidity inside a key level. The key level was a daily bearish for value gap. So once we take out the liquidity into a key level, we start to break structure. Last swing low that took the high. And now we have this for value gap. So your entry can be taken right here. Stop above the high for 1 to 2. Ideally, you can target the upcoming swing low. So I would want to do that. A little high risk to reward. It's also a bearish order block right here and also potential OTE entry. So our entry could also be here at the OTE, but when we have all those overlapping PD rates, I'm just good to take my entry on the start PD rates and let my stop loss be able to trade into them before trading lower. Like I don't need to catch the absolute top. I just want to make money. So my stop loss will cover potential trades into the OT area. So let's see what price gives us. So we tap into it 2 times, here and here. Maybe even 3rd time. No, we don't do that. And then here we go to the draw on liquidity. That's this swing low. So if you would have waited for the order block for the OT era, you would have missed this move. An example where price for this first entry does not come back to premium of the range. So if you would have wanted a premium discount, then you would have missed this trade, and that's fine as well. You cannot be in every single trade. The A+ setup is when price comes back to premium. If you go back here, once price steps into here and then creates a new low down here, there's a new range created right here. And for the second entry, price comes back into premium of the range. So for this entry, one on the PM session here, there is where the A+ setup was. So the entry would have been officially right there, not here. And there the entire A+ setup was present. Liquidity sweep into a key level, market structure shift, price come back into the fair value gap in premium of the range, and it's formed inside the PM session, inside that kill zone. And then price goes lower. And in this final example, we're looking at NASDAQ on the 1-minute chart and looking at the time we are in the New York kill zone. And we have a old daily low right here. So what we want to see is a liquidity sweep where we take a swing low here. And from here, you want to see a market structure shift. So do we get it already? No, because there's no last swing high being taken out. But then we have another liquidity sweep down here inside key level, the daily low. And then we break structure. The last swing high that took the low right here gets violated. And here is where your entry could be. For value gap, order block breaker, and if you miss that one. So here, your first entry could be stop below the low, target the high, entry 1. Let's say you miss this one. There's another value created here, right there. Second entry could be here. And this is a trade I actually took myself here in the second fair value gap. Stop below the low, see a bigger target. And where can we trade towards? Well, there's all these failure swings. So you can basically target all these highs here. But let's say you want to target low-hanging fruit. When I would target this high, then you see the risk to reward is not worth it. So you need to or up your TP, that's what I want to do. Or make your stop loss smaller, so you can put your stop loss below this fair value gap. Let's make a bigger trade right there. And price taps into this fair value gap. So here you are in for the second entry. And there's where price starts to move. And where that first liquidity pool is taken. And why is price so fast here? Why does price not stick around here? That's because there are failure swings here. Low resistance liquidity. Those are swing highs that don't take out any liquidity. So if you watch my liquidity video on my channel, you will see exactly this happening when you have low resistance liquidity. So price chills here for a while, and just after the New York lunch, the trade hit TP. So not only that one, you could have taken 2 trades. A smaller one and a bigger one was all based on the A+ setup. You wait for liquidity sweep into a key level, the daily low in this example. You wait for a market structure shift. You use your value gaps or blocks or breakers for your entries. And the structure is forming inside time. And what you're missing here is price that comes back into discount of the range. Right here, you see price does not come back to discount of the range. And here again, when you use premium discount, you would have missed this trade again. So in bullish conditions, very trending conditions, you might want to be more flexible with the premium discount, or let your stop loss be able to price to come back into the discount range before taking the long example. Based on my data, I noticed that I take my trades earlier and use my drawdown, my stop loss for price, if it wants to come back deeper into the range, to OTE, to discount range, to cover that so I don't get stopped out before the real move. And there you have it, the A+ setup. Use this setup to go backtest, go journal this, and build data on what's working for you. This is the exact framework I use to get funded, to get payouts. I'm very confident you can do too. If you like this video, consider liking and subscribing. If you're not inside my free school group where I trade every single week, I share my trade ideas every single day. There's lots of free trading material available inside that. I will leave the link to my school group in the description. Thanks for watching, and I see you in the next one. Bye-bye.